Good afternoon, traders and investors. Will back here with another one, coming to you with a Friday and weekly market recap. Hopefully you guys had a good day in the markets and wrapped up a very good week of trading profits and long-term portfolio gains as well. And in today's action, guys, the SPY and the QQQ ended up higher, the SPY actually hitting its own new all-time high after the QQQs reached that record just a few short days ago. However, the day was not without a bit of drama, all things considered. You can see that there was a clear sell-off in the early hours of the afternoon that was quickly recaptured into the end of the day. What exactly happened? Well, it had to do with Canada's digital services tax. Trump saying he's terminating trade talks with Canada over this digital service tax, saying that we will let Canada know the tariff that they will be paying to do business with the United States of America within the next 7-day period. The digital services tax, I will remind you, is something that foreign nations put on American big tech companies. I mean, they're technically on all foreign companies, but largely only American big tech companies have the revenue benchmarks to actually have to pay that type of tax, as it is based off of most foreign nations, based off of the revenue that those companies are generating from the citizens of that same country. Now, I'll remind you as well, if you don't know about digital service taxes, over 30 different countries across the world have implemented these types of taxes. The European Union has had them in place for a number of years, and several other major large trading partners of the United States have also had them in place. However, now that we know that there's some ongoing negotiations between Canada, the US, Mexico and the US, and everybody else in the United States, of course, any implementation of these taxes now will, of course, attract the attention of the president, and he did not mince his words today, definitely. So it was an ongoing story. We'll see that tax is supposed to come into place on the Monday morning session. So we will see whether or not it sours trade relations further between the US and Canada, or whether or not they are able to broker some deals. This point will definitely be a point of contention and possibly leverage as well. Other than that, it was a very beautiful day, and at the end of the day, we did start to see some quarterly rebalancing. Several tech names getting big jumps in the last 5 to 10 minutes of the trading session. So in today's video, guys, we're going to cover a number of things together. Number one, we will be going through the technical analysis rundown of all our major indexes, see where the rotation is and is not. Thereafter, we will jump through our big tech names and do the same thing. Technical analysis, determine which ones are good swing trades, possible levels for those swing trades, and also which ones could still be representative of good long-term portfolio buys, provided that they're not too expensive as of right now. And thereafter, guys, instead of going through the biggest gainers and losers of the week, pretty much, we are going to be going through 10 companies that I am specifically looking at for swing trades, companies that I don't talk about too much on the channel, but this time I did want to bring them to your attention just for some potential ideas for you as well. As the markets clip into all-time highs, several companies have somewhat been left behind, so we will do a good job of exploring those into the end of the video. And at the very last portion of the video, guys, as per usual on Friday sessions, I'll be running you guys through my portfolio and which trades we are keeping into next week. Quick little glance, guys. It was a very good week for us overall. Many wins. As a matter of fact, only wins. Several wins on the wheel trade. The wheel trades for the strategy, a couple, well, actually one directional trade that was closed, but several others that are running into profit. I'll show you those towards the end of the video, and a few lottery trades as well, either call debit spreads or another short put for Nike earnings. One loss, but this was a loss that I took, or a trade that I took rather, about 2 months ago, a month and a half ago at this point. It was just a hedge, a small little hedge in the event that the QQQs would break down into weekly consolidation. That did not happen. We broke through the all-time highs. As a result, it invalidated my hedge position, so we just closed it for a small remaining recapture value there. But other than that, it's been a very good week for us. We'll recap everything at the end of the video. So with that being said, let us dive right into it, right? And since we have no earnings and no major news to go over either, I mean, we could talk briefly about the PCE that came out very early this morning, but overall, guys, it didn't really show much, right? We were kind of calling for an uptick, and the markets were correct on that. Core PCE, as a matter of fact, ticking up to 2.7 from 2.6, month over month at 0.2 versus the 0.1. It's not going to be enough to move the Fed's hand either way. I don't think it's a significant data point in either direction either. Personal income was down 0.4% versus last month's 0.3, which was a positive read. But all in all, unless we see a clear degradation of personal income, I mean, this one has been on an uptrend for a while. So one little month here of downtrend is not going to be the worst, all things considered, for your personal income. You can see that right here, right? It's the first time that it's been dipping down here over the course of the year. So all in all, guys, it's not that bad. One data point is not going to be enough to derive a trend from this, but definitely something that we have to pay attention to in the next 2 months, as we know that the Fed likes to line up 2-3 data points to make their determination whether or not the economy is in a healthy place, the jobs market's in a healthy place, etc., etc., etc. So those are just some of the highlights of the day. Nothing much that moved the markets overall, and nothing that will really tilt the Fed's hand in either direction. So let's move into the charts right away, shall we? In terms of the SPY, guys, brand new all-time high, so congratulations to all long-term portfolio holders out there. I'll remind you, if you watch the channel for the trades and you do not have a long-term portfolio, guys, I don't know what you're doing. Have a long-term portfolio and a trading portfolio as well, and keep them separate. The long-term portfolio is something that you will always be able to fall back on, and it's something that you're doing for your long-term future. Sure, trading the markets is obviously very nice. You guys see me do it every day, but I also have a long-term portfolio of buy and hold companies that I simply add to with every single paycheck every single month, essentially, right? So the SPY breaking up higher, we know clearly that the daily bulls are now back in control. It was a daily downtrend, followed by a nice engulfing move beyond the all-time highs. Any weakness, and even the weakness of today, guys, if the weakness of today somehow continues into the Monday session and we get a breakdown of the lower time frames, what are we looking for here? We're just looking for the good old breakout, retest, and possible continuation of the markets. We have a few catalysts for continuation of the markets, especially number one would be seasonality. Seasonality is usually very bullish in the month of July. We also know that institutions have been buying where retail has been kind of selling off here. Due to the conflict between Israel and Iran, institutions were there to buy that dip, and we are seeing some continued momentum to the upside. So the markets still have a lot of participants that are willing to buy the dips as accordingly, right? So keep that in mind. And also the fear and greed index, right? We're only at 65. I know it's still in the greed category, but as you guys well know too, we can move a lot higher. Market momentum is very good. As a matter of fact, it's still neutral despite the elevation that we've seen in the last 2, 3, 4, 5, 6, 7 weeks at this point in time. Stock price strength is very good. The breadth is extremely good. And in terms of your breadth indicators, if you want to take a look at the breadth indicators, I mean, everything's not looking too bad, guys. Percentage of stocks above their 20-day EMA. We can see on the daily chart here that it is starting to curl higher as the SPY moves into the all-time highs. We know that we've had institutional support for a while. That would be the percentage of stocks above their 50-day moving average. As long as this is above 50%, you can say that institutions are net buyers of this market. We're coming into the highs, which means that maybe the bulls might get tired if we keep pushing beyond the all-time highs in the early stages of July. But as of right now, you are not seeing an overall overbought market, similar to what we had in the month of January of 2024 as well, and several other times where it's gotten in the high 70s to 80 read. And percentage of stocks above their 200-day EMA. This is where you can see that the breadth of the market can shift into a couple of different sectors that have not been shown the same love. As a matter of fact, percentage of stocks above their 200-day EMA, guys, only 47% of the market is above its 200-day moving average. There is so many companies right now that are left behind. Granted, most of them all are in value and defensive sectors overall, so not the highest flying stocks, but you're kind of missing half of the market in terms of overall broad momentum and long duration momentum overall. So the market can find more momentum and more rotation from other locations. We can take a look at the heat map as well to take a look at what happened today. Overall, big tech, fairly mixed day. Microsoft, Apple declining, Tesla declining, but some very nice gains. Amazon and Google, all these gains, guys, came in the last, well, not all of them, but a majority of them came in the last 5 to 10 minutes of the session. Financials not doing too bad, healthcare not doing too bad as well, and the bottom half of the market, the more value-oriented side of the market not doing too bad. One day relative also shows that the market was fairly good, much more sectors that were advancing than declining. To the downside, healthcare, energy, basic materials. To the upside, led by some consumer segments, both cyclical and communication services. And on the 1 week relative, with the SPY pushing up to the all-time high and very bullish candle closes on the weekly, guys, almost all segments of the market except for real estate and energy have been moving higher by multiple percentage points. So overall rotation in the SPY still remains very healthy. Extremely bullish candle close on the weekly time frame. The bulls never lost control of this. The most recent weekly higher lows are set now down here at 592. And I'll remind you, if we come back and back test, very nice area of support, 608 down to 597. It's not going to be easy for the bears to blast through this, guys. It's a very important level of resistance that we just broke. So you would expect the bulls to want to defend it now that we've clearly made our way above. Moving on to the Qs right now. The Qs, same concept, well beyond the all-time highs at this point. We had a tightening range into resistance. It was big resistance, guys, That was resistance since the month of pretty much December. We've now finally cracked it with the short-term bulls in control, and any move lower, we will be using this now as a backtest location. 537 down to 523. Nice little breakout, retest, and possibly run could be on the table right now. And we have that bias because our long-term bulls never really lost control of this chart right here. Looking very, very, very strong. Got a little bit weak there with the Iran-Israel conflict, and now another leg of momentum higher. I'll remind you, the monthly candle closes. Close, guys. They do close on the Monday session. If your candle closes like this on the Qs and the SPY, that is a very bullish momentum candle. It can lead to some continuation. And when you know that July seasonality is pretty good, you can possibly expect some of that continuation, especially in the early stages of that month. So keep all of that in mind and plan your trades accordingly. We could just be looking for more follow through. I know it's hard to believe, but we haven't had any negative catalysts, guys. This week, right, we haven't had any negative catalysts since pretty much the ceasefire occurred on the Monday session. It's been pretty much up only. And as a matter of fact, you saw the only negative piece of news that we had today was this one. And the markets were very quick in buying the dips overall into the end of the session after your early morning gap was filled. Moving on to financials right now. Financials also not doing too poorly, breaking above their own resistance range. And that is 51.50 down to 50.75. They're still battling with the all-time high ranges. 52.31 essentially is going to be that range. And not all companies here are the same. The banks have been doing very well. They have earnings coming up in 2 weeks. JP Morgan, brand new all-time highs. Wells Fargo Corporation, also near their most recent highs. Bank of America, also near their range of highs as well, set last November too. So keep all of that in mind, guys. The banks are doing well, but not all companies. Some of the biggest weights in here, Berkshire, Visa, MasterCard, 3 of the biggest weights. Take a look at them, right? They're lagging. Berkshire lagging behind. Berkshire has been down now for almost 3 months in a row. It doesn't happen that often, but usually when it does, and they're going contrary to the rest of the sector, it does represent a buying opportunity. Visa, same concept. Visa and MasterCard, they've been down for a few weeks in a row, so they're definitely not helping out financials. Those are also very humble buys, in my humble opinion. Moving on to XLV right now. Healthcare. We know that healthcare has been the most lagging sector out of everything. Even consumer discretionary and consumer staples are doing better than healthcare right now. Can you imagine, right? So moving on in, guys. The weekly downtrend was very pronounced, and now we got a nice 75% bounce out of the most recent weekly leg of declines. The bulls are looking for one simple thing, the higher lows, and go for the trend change. Of course, that would need a break of 137. The clearest time frame, because the daily is slightly choppy right now, clearest time frame is the weekly, and that's what indeed they're looking for, looking to set some monthly lows. It's a monthly downtrend, so you have to reverse the daily first, give me the daily uptrend back. Then you have to reverse the weekly by taking out this weekly high right there. And thereafter, you will know that your monthly lows are set, and we're going for a bit of a monthly upswing. Resistance range stays put, 145 up to 147. I'm still a big fan of playing healthcare overall, but I'm not playing individual names. I'm playing the sector as a whole, and I do have leap call contracts. I'll once again show you my strikes at the end of the video when we go through my trades. Moving on into semiconductors. Semiconductors up 0.44% today. Also very, very close to their all-time highs, guys. The all-time highs are 282. We are almost there. One thing is for sure, the bulls are in absolute complete control of this daily uptrend. Beautiful area of consolidation above the previous resistance range, which now became support. 260 down to 250 and tons of space. Anything above 257 on a pullback. Looking for a higher low. For possible further trend continuation, where could the higher low come? Either at 265, the top end of these guys that stop them out, or all the way down into the support range. Anyone would be good in my humble opinion. The bulls are working with an absolute ton of space right now, guys. The weekly higher lows are all the way down here, 235. So any meaningful loss of the daily uptrend and consolidation, you're just going to be looking for a weekly higher low. And you know, definitely the bulls are going to be sitting in this range. One of my favorite companies, I'll bring it up again at the end of the video. I guess I tipped you guys off on one of the top 10 stocks that I'm looking for. ASML, it's one of the biggest companies that has one of the strongest moats and competitive advantages in their respective niche that still has not ran. Of course, it's ran from the bottom, but in relation to the all-time highs, not so much, especially when you compare it with some of their other sector peers. And lastly, the IWM Russell. So the Russell also still trying to break above its resistance range. Your higher lows are still set at these lows right here, about 207, right? And now we're trying to break above 217. Couldn't get it into the close today, but we're working with a ton of space. If they get trapped in this resistance range, which is 217 down to 208, you can't expect the bulls to try and use the bottom end and all the EMAs on the daily to try and hold the level and gain a little bit more accumulation and then go for the break. Overall, though, it's not looking too poor, especially on the weekly timeframes. The bulls still are in control of this time frame right here, just looking for a little bit of expansion beyond that resistance range. Not looking too bad. I'm not participating in the Russell just yet, but could be something on the horizon, as this sector is definitely also lagging the performance of the SPY and QQQs, not actually being close to its highs of 240 that it set earlier on in the month of December overall. If we take a look at our minor sector rundowns, XLP, decent area to take some swing trades here. 80.7 down to 79 is going to be the range. Nice area of support set over the last 3 months. And overall, this is just on a monthly time frame, guys. This is a bull flag. No matter which way you see it, it's a very wide bull flag, accumulation range, looking for a possible breakout. This one has not set new all-time highs, guys, since the month of August. It's almost been a full year of accumulation at these levels. And if we do see the markets broaden out further and further, you can expect money to come pouring into the XLP overall. So pay special attention to this one. It could be a nice one to watch. XLU, same concept, right? XLU as well. On the monthly timeframes, in my opinion, show the clearest pattern right now. We got the monthly lows are set. We now have a nice monthly engulfing move, and now we are bouncing out of short-term weekly support, which is pretty much 80 down to around 79 as well. Any retests of this area could be interesting to play if utilities is your cup of tea. Moving into two last ones right now. Real estate not doing too bad. Probably it's going to be helped with the decline in short-term and long-term rates over the next 6 to 9 months. But all in all, it's probably going to move a little bit slow. Support stays put 41 down to about 39. That's the range, and you can see it's been accumulating in this area for the better part of the last 6 months. Of course, the tariffs lows blasted right through them, but now not all that bad to consider some real estate plays, either XLRE, which encompasses a lot of REITs, or one segment of the market which will do fairly well in the event that we do not have a recession. This is a no recession thesis trade. 9-10 months of declines in a row into the 50 EMA. This sector is ITB, U.S. Home Construction ETF overall. We know the sector has been moving slow. They've been consolidating now for the past 2 months at the lows. And this is a 5-year trend line. It might just be worth a bid if this is something that you like playing. Moving on to XLE right now. XLE also roughly sideways, but that's no stranger to XLE. They've been sideways for 3 years. Obviously, it moves up and down with the conflicts in the Middle East overall, and we know that this week unwound the price action from the conflict, but the bulls are still in short-term control of this chart, looking for higher lows for some potential appreciation. I don't like playing energy that much because there's just so many factors that influence it, but that is the price action for any of you that were interested overall. Now, moving on to the VIX, we'll do this very quickly because the VIX is just moving lower and lower, possibly coming into the lower bounds down here, 14 down to 10. We have not hit those lower ranges since November and December of last year. The lower we go on the VIX shows the more bullish the market is overall. And even today, with today's, drama between Canada and the US, the uptick was very small and very short-lived overall. It's going to take a big catalyst to move this one to the upside, in my humble opinion. When the VIX is low, we can be looking to buy options, but of course we don't want to buy things at all-time highs, right? This is where you go in combination. The volatility is low, so now we need to look for high-quality companies that are not near all-time highs with still very high competitive advantages, because now the options on those companies are going to be at their cheapest level that they've been in a very long time. That is how you use the VIX to your benefit if you're looking to buy options, right? Moving on to the dollar still excessively weak, still daily and weekly downtrends, no stop in sight. If you guys want to know the next level that we could possibly go into, it's all the way down here, 95. Not much support before the 95 level, so we will see how the dollar acts in the near-term future in terms of yields. Yields ended the week very nicely. I've been saying on the 10-year yields, guys, we need a break of 4.2. Give me a break of 4.2. That's an engulfing move on the weekly and could point to the fact that maybe, just maybe, we're going for a little bit more of a monthly decline on these long-term yields as we get closer and closer to those rate cuts. And on the 20-year yield, same concept. However, this level is around the 4.7 4.6 range. That would be a nice engulfing move on the weekly, which show that the bulls want to move down on the higher timeframes overall and could lead for some more bullish price action in TLT. TLT, the 20-year bond, of course. And as I've been saying, it's a phenomenal entry opportunity down here for TLT, guys. I mean, it's the lows of the last how long? Since 2007, 2006. So if we are playing bonds, we do want to be buyers, but we want to be buyers with a long-term time horizon. As we know, there's many things that influence the price of bonds and yields right now overall. Moving into gold right now, gold is not doing very well, guys. almost invalidating our entire trade setup, right? Now, unfortunately, in the shape of a daily downtrend, sadly. So we lost the daily time frames right now. We have cracked through some moving average here, important ones as well, the 50 on the daily. On the weekly time frame, it's getting dicey right now. You're challenging the 12 EMA. The 12 EMA has been the main point of defense for the bulls since the month of December overall. We did not crack it since November. And overall, if we take a look at the higher time frames, such as the monthly, if you lose that, guys, you might be going into monthly consolidation. Also, you are in monthly overbought conditions on the RSI. Could we see some declines here on gold down into the lower 3,000s? It's very possible, especially if equities get more and more bullish and there's a lack of volatility catalysts. Well, of course, people are going to pivot away from this very profitable gold trade through uncertainty and now possibly move it into equities overall. The levels still have not broken. I'll let you guys know. But as of right now, the swing trade attempts that might have been had there have now been invalidated. The stop loss has pretty much been triggered, the break of 3260 overall. So we'll pay attention to that in the near term future. And now Bitcoin up 0.05%. Very short, very small candle for Bitcoin, right? Bitcoin's just been doing nothing for the past 3 days. However, the bulls are now regaining control of several timeframes. The daily is a nice engulfing move, and we've reclaimed the support range 105.5 down to 101.5 overall. The cleanest time frame, in my opinion, guys, is the weekly. This is a bull flag. No matter which way you cut it, that is a bull flag. Beautiful weekly uptrend. Consolidation where, guys? They've consolidated. Look at the size of this move. They've consolidated in the top 25, 30% of this entire move, and we've refused, after multiple attempts, to give back the support range. So all that being said, the bulls are looking pretty good for some continuation. The seasonality for July for Bitcoin is usually pretty good. Couple that with possible expansion in equities, and you might end up with a very decent long trade attempt. If we're taking long trade attempts from here, there's a very clear stop loss, which is down below the $100 mark or $100,000 mark. Expansion targets, call it 115, 120 over the next 30 to 60 days overall. It would be a big move on Bitcoin, but we know when the markets permit, Bitcoin can make these very nice second legs higher. That's everything for our overall market rundown. Hopefully you enjoyed that. Now let's dive into some big tech names. So we're going to do these a little bit quickly because not much price action has changed. And if you've been following the videos all week, you guys know my stance on these. So we're going to start off with Apple. Apple still flat. No movement on the daily, guys. The daily is still just a very, tightening range of accumulation right now. Trapped between two levels. The two levels are very clear right now. Resistance 210 to 220 and below support 196 down to 188. You guys know my stance. There is a swing trade in motion right now. Stop loss will go below 193. And then we are targeting 215 to 220 top end of resistance. I am in this swing trade myself. Apple right now, not a buy for me on the long-term portfolio because the valuation is very expensive right now, and Apple's been struggling with their revenue growth rate and their iPhone refresh cycle overall. However, at the end of the day, Apple is lagging significantly behind its index, and this does not happen too often. This is why sometimes I think that this one is a very good swing trade. You can clearly see there's a few times in recent memory in the last year and a half that Apple's been having divergence with the index. That's the SPY. This is Apple. When it happens, Apple usually corrects in the direction of the SPY. Same concept. SPY's been going up. Apple's been doing nothing. So sometimes you can see a little bit of catch up being made by Apple, which is why I do think it's a very decent swing trade opportunity, but I'm not adding it to the long-term portfolio. Moving on to AMD right now. AMD rejecting from resistance. That's fine. We've been calling this one out pretty much all week. 145 up to 155 is that resistance target for AMD. It's not the biggest level in the world, but we do have a lot of confluence areas from the past, right? So keep that in mind. 150 is also your round psychological number. In the event we pull back a little bit, the bulls are in full control. Beautiful, beautiful, beautiful daily uptrend with the higher low all the way down there. 115, any move lower, looking for a higher low, possibly going to come down into our support range, which I will gladly turn green as now we've blasted through it this entire week, right? And that support range is 132 down to 120. Could be a nice re-entry opportunity for some longs. If you lose the structure on the daily, you're just looking for weekly consolidation at the same time, and the higher lows are down there, guys. 108, right? Anything above 108, just looking for a little bit of weekly consolidation. If they cannot break above this area, just looking for some consolidation for some possible potential longs. Overall, the valuation for this one for a longer term swing trade is not that bad either. Still trading around a 1.2 forward peg. 2026 numbers are even better, and I'll let you guys know in terms of the fundamental catalysts, right? They're getting into their data center expansion years. Look at the EPS ramp in the next 3 years. Ridiculous. They're going to almost triple EPS from this year, guys. That's not nothing. And revenue as well from 2025 through 2028 is going to be a doubling in revenue. So AMD for the next couple of years could be a very attractive swing trade at these current levels, even if we're not buying it at the lows. Moving on to Amazon right now. Amazon up 2.85%. But look at Amazon's price action all day. Gap up open, consolidation, the news between Trump and Canada, recovery of the markets, and then the last 10 minutes of the day. This, my friends, is index rebalancing. This is institutions buying overall. That is what you like to see. It means that people are very bullish on Amazon and possibly the stock, as I've been saying for a very long time now, this entire time, Amazon's kind of been left behind, right? The valuation is not too commanding right now, even at 220. In terms of their forward growth prospects. I mean, just look at the forward forecast for now, right? In terms of EPS expansion, look at this EPS ramp by Amazon, right? Fantastic. Look at this revenue ramp by Amazon. By 2029, they'll probably be doing about $1 trillion in sales. Can you imagine, guys? The first company, right? Possibly going to do $1 trillion in sales. That's absolutely massive. But why does it matter? Because the company, all while they're scaling revenue, they're becoming more profitable while they do it. Better net margins, better free cash flow as well. And Amazon is a company that has many arms. That being said, daily downtrend now into a big engulfing move, challenging resistance 228 down to 217. Moving on into the weekly time frame, which is the clearest time frame in my humble opinion. The bulls are in full control and might just be looking for that expansion cycle. The weekly higher low is set at 207 and now looking to persist. Look at the monthly time frame as well. This is a gorgeous candle. If it closes like this on the Monday session, we might just be looking for some continuation into the all-time highs over the month of July and maybe early August into the all-time high range 240. Long-term portfolio buy, yes. Swing trade from here. I mean, I was giving several hints about swing trades on Amazon in this lower location, in this location. You're a little bit late, I'm not going to lie, but not financial advice. If I were to take some longs here, you'd probably make some money, but it's all about risk to reward, guys, right? And it's not the most optimal right now. It can have a good chance of working, obviously, but still, right? Moving on to Google right now. Google, same concept as Amazon. Google's up 2.2% today, but look at the price action, right? Gap up open. Well, not, gap up open from all things considered. Consolidation all throughout the day, giving back all of its gains, going red. Market recovery. And then the last 10 minutes, look at this. This is institutional buying, guys. You got to pay attention to this with the end of quarter rebalancing, yeah? Daily downtrend. Now the bulls have done something insane. Full engulf of the most recent leg of selling. That's what you want to see. They've created a lot of space. So if we falter here and go down, you're looking for a daily higher low and get the daily uptrend pattern back. Why do we have a bullish leaning bias on the short-term timeframes? Because they never lost the weekly timeframes, guys. They've always been in control. We were looking for a higher low. Couple that with all the EMAs. As you can see, all the EMAs are right there. And support 170 to 160. I was very clear in saying this was a buy opportunity. You guys are going to see that I did also do a leap call contract on Google, literally at the lows, the absolute lows of last pretty much on Monday, essentially. I'll show you that contract towards the end of the day. And now it's moving pretty well. Looking for expansion right now, 185 up to about 190, not looking too bad. In terms of a fundamental buy, it is still cheap. It is still very cheap. I think Google is significantly undervalued. My price target for 2026 is in the low 200s, call it 220, 230. Still a lot of possible expansion for Google to be had and might be coming up on a decent monthly candle close, especially if we get more of that end of quarter rebalancing into the Monday session. On to Meta right now. Meta also not showing up too bad today to the markets, right? 738 is the all-time high, 740, 737, 740, let's call it. Almost there. Meta price action, very bullish. Consolidation range, breakout right now looking very good. If we falter, they're looking for the higher low. Anything above 678, looking for a daily higher low for possible another attempt at your all-time highs. Now moving on to the weekly time frames. Bulls still largely in control of this chart right now. Beautiful weekly uptrending pattern, nothing bad to say. But we're going to look close to the all-time highs. In terms of swing trades, not for me, guys, not for me. This was a nice swing trade location. Down here was nice swing trade locations overall. Even here on the break, right? If you're looking for the breakout with the stop loss below there and targeting the all-time highs, you're almost into profits. But here, there's no swing trades here, guys, right? There's just no price action for a swing trade other than buying and crossing your fingers and hoping the market continues to go in a bullish direction, right? It's not a replicable thing to do, right? You cannot repeat this type of trade. It's not proper trading, in my opinion. That being said, even for a long-term portfolio right now, guys, Meta was a buy here. Meta was a buy all throughout down here. Up here, it's starting to get a little bit expensive, although not that egregious overall, trading almost at a 34 price to earnings and above a 2 peg. When things start to get above a 2 peg, especially when they were in the mid ones in terms of a peg ratio, this is when I stop buying Meta. But I'll let you guys know when I buy Meta again, okay? Moving on to Microsoft right now. Microsoft actually down 0.3% today. A very rare red day for Microsoft, especially in terms of most recent action. Microsoft is the same as Meta, right? We needed to be buying every time it came into support down here, or during the tariff sell-off when Microsoft was arguably cheap. But up here for a long-term portfolio, it's a hold for me. It's not a buy, it's not a sell, it's a hold. That being said, the bulls are in full control right now. Beautiful price action. Higher lows are set right now, 472. Looking for a higher low on any drawdown. And even if you break the pattern and go into a daily downtrend, you'll just understand we're looking for a higher low after what? 6, 7, 8, a million weeks in a row at this point in time. Looking for a weekly consolidation phase eventually, which could bring us back into maybe the 460 down to 445 region if Microsoft gets a little bit of rotation to the downside. But the monthly candle close might just point to Microsoft having further upside. I'm definitely happy that I'm in the stock right now, but no new swing trades from me. And of course, no new long-term portfolio positions. Moving on to Netflix right now, a bit of the same concept. Netflix for me is a hold right now overall. Short-term price action is gorgeous. All things considered, the daily higher lows are set at about 1200, looking for a nice furtherance of the leg of expansion. Any move lower looking for a higher low for possible continuation, if you can believe it. And even if we unwind and do the daily downtrend, they have so much space, guys, right now, right? Anything arguably over here, like 1100 roughly, just looking for a weekly higher low for possible further continuation. But we'll keep an eye on that, guys. The monthly is very, very extended from the 12 EMA, extremely extended. And the valuation as well is very extended. It's a hold from me. It's monthly overbought conditions, right? It's getting into weekly overbought conditions. It's ran an absolute ton. The stock currently, year to date right now, is up 48%. So if we're buying up here, right, you're basically buying and crossing your fingers, essentially, right? It's not the proper way of trading, in my opinion, but you guys are free to do what you want. Of course, congratulations to all bulls that have held this one through the declines, added to their long-term portfolios around the 200-day EMA, which is arguably the last time that I was adding some shares in this drawdown as well. Moving into NVIDIA right now, NVIDIA fresh new all-time highs, 1.76% to the upside, looking very strong on NVIDIA overall after breaking through the all-time high resistance this week. I will gladly now turn this box green because resistance turns into support once you crack through it. Obviously, the bulls are in full control. Any move lower now, anything above 142, looking for a higher low for possible further trend continuation. And we have a very nice area of support, 150 to 145. All-time high resistance range. NVIDIA is looking very strong right now, even on the weekly, guys. How much space do the bulls have? A lot. Anything above 95. So any extended consolidation, guys, will probably just result in a buying opportunity for this fantastic company. I didn't do the valuation at 157, but you can now understand that at 155 up from here, the valuation is going to be close to a 35 forward price to earnings, close to a 1.5 peg ratio, 1.55. So NVIDIA was a buy, arguably sub 130, and obviously down here in the $100 range. Here, same concept as Microsoft and Netflix, right? If you missed it, you missed it. There's other better stocks in the market to buy right now. Possibly all buys now will still be rewarded, but that's not the point, right, guys? We want to buy things when they're cheap, and we want to buy things when they have clear price action. As of right now, you're just literally buying and crossing your fingers and hoping that this exponential move higher is just going to continue, but that's not the best way of doing things, in my opinion. On to Tesla right now. Tesla down about 0.66% today. Tesla cannot get it together overall, back into this short-term range of consolidation, and we're literally at the midpoint, right? The price right now is at the midpoint between resistance and support. So in my opinion, there's no real swing trades right now. You either have to come lower into this area and give me some swing trades from the bottom, or prove to me that you want to crack above the 340 to 360 resistance highs, back test them, and then maybe we can talk about doing something like a level to level trade up here. As of right now, no swing trades for me. The price action is somewhat unclear as we are just trapped right now on the weekly timeframes. Big consolidation, right? It was starting as a weekly uptrend, but now we might just be looking for some sideways consolidation as Tesla continues their rollout of the robo-taxis. So no swing trades for me. The price action is just somewhat unclear right now. And also no additions to the long-term positions. Moving on to Palantir. Palantir coming down 9.37%. Now they did get a little bit of love in the extended hours, coming up about 3% out of that decline. But here's your end of quarter rebalancing on Palantir, guys. in the last 10 minutes, big sells in favor of other companies such as Amazon and Google overall. Definitely one of the biggest days of sell-off on Palantir in recent memory since pretty much the tariff episodes overall. But the long-term bulls, or the medium-term bulls rather, are still in control. We have now lost the daily uptrend structure. The lows have been broken, the 137 lows. So now you kind of lost the daily uptrend and you're just going into weekly consolidation. Support stays put 125 down to 120 overall. So we will keep an eye on this one. If it comes down into here hot with some good volatility, you might see me play some short puts, maybe 110 or lower if I can actually find them. I want to be below this support range, but we'll keep an eye on that one. Palantir as well for me is a hold right now. Dare I say sell? I've already sold all the Palantir shares that I wanted to sell. I'm still keeping about 400 shares of which I bought Palantir. You guys know me, right? I've said it many times on the channel. I started buying Palantir here. Then I bought this entire dip. And then I started selling as it was moving up. My highest sale on Palantir so far was about 115, 114. I have not sold any in this location. I had about 1,800 shares. Now I have 400 shares. I'm holding, but still, it's very pricey, right? The company is very pricey right now. I don't mind playing it for swing trades, but the swing trades for me are going to be volatility swing trades. If it comes down in a rapid fashion, I'll try to sell some puts down there. I don't really want to be assigned. I just want to play the volatility, but that's just my views on the company overall. And that's coming from me, a Palantir shareholder, right? Sometimes you got to recognize I hold Microsoft, I hold Netflix, I hold Meta as well. But you have to be able to objectively say when things are cheap and when things are expensive, right? Moving on to SOFI right now. SOFI up 2.44% overall. They were up a little bit more throughout the day. Fantastic move on SOFI, trying to attack the higher end of the price action that we've achieved over the course of the last 6-7 months. Not looking too bad there. The bulls are in full short-term control. I mean, SOFI is kind of the same concept as the other ones, right? It's made a very nice push over the last 3-4 weeks. I was saying it was a buy this entire range. I was definitely saying it was a strong buy all the way down there. But now it's not that you're late. If you have a long-term time horizon, like the next 3 to 5 years, you can have some market cap expansion. It's only 19 billion market cap. You know, if you take 2027, 2028 sales and do a price to sales comparison, it's not that bad. But once again, that's a 3 to 5 year time horizon, not by the end of this year. If you wanted the end of this year metrics, you would have had to kind of buy down there to get the best possible risk to reward. That being said, daily uptrend is very nice. Any move lower, we'll be looking for a higher low. Since they've closed the weekly candle above our resistance box, which was 16 to 14, I will gladly turn this box green as now it is support, and any back tests into support could be good, looking for a higher low for further price appreciation. Or if the event we give this back and go into a daily downtrend, well, you just need to understand what the bulls are going to be trying to do, right? Just cool down the time frames a little bit. It's still going to be a very nice weekly uptrend overall, where there's actually 2 legs here. Just gonna be looking for a higher low. Anything above $12.89, call it $13. Higher low into support for possible further continuation. If we come down, you might see me write some short puts in around the lower bound of support, which would be the lower 14s. Moving on into Uber right now, down about 1.71 on the day. But all that being said, not too terrible, right? We know it was a daily downtrend here. Beautiful engulfing move. The bulls are looking for a higher low. Anything above 82.5, looking for a higher low, possibly for some further trend continuation. The weekly time frame, in my opinion, holds the key. This was a gorgeous swing trade. I'm happy to read that in some of your comments, guys. I mean, some of the comments are from my Discord members, but we were pointing out this one was a very attractive swing trade, guys. It was a breakout retest of a level. Very nice accumulation above the support, which was around 81 down to about 78. Gorgeous opportunity for the longs, and now the longs have come into take profit territory. So if you're buying here, sure, it can continue into the $100 range. It's not best practice, and it's not my favorite trade. Why? Because the stop loss is so far. The stop loss is $10 lower, and you're going for $10 into the psychological 100. It's equidistant risk to reward. Not my favorite style of trade, right? When that happens, I mean, although you may want Uber, you're dying to buy Uber, guys. There's times to buy things, right? And you got to recognize those different things. I'm just here to show you guys best practice for swing trades. Some people love going for the breakout style trades, and that's their bread and butter. If that's your thing, by all means, I just think that breakout retest trades have higher probabilities of success, and you also have a much wider risk to reward profile. So it means that if you lose some trades, you have to win a lot less trades to make your money back, right? If every trade you take is a 2-to-1, if you risk $50 to make $100, you can effectively lose 2 trades, win 1, and you get your money back, right? The breakout trades, not so obvious, and sometimes they're traded on the lower time frames, which can be very volatile. Lastly, TSM up 2.04%. TSM, its own new all-time high right now. All-time high was here, 226, broke higher, 228. Fantastic, fantastic price action from TSM, backtesting our support DAC here, 212 down to about 204, looking very good for expansion. And in the event we pull back, just looking for a higher low, anything above that same range, 206, higher low for possible further trend continuation. If you give it back and lose the uptrending pattern and go into a daily downtrend, understand what's going to occur right here. The bulls are just going to be looking for a higher low for possible further trend continuation. So we will see how it goes. No swing trades on TSM from me. Nope, those are to be had in the under $200 range, looking for the break higher, or to be had all the way down here. So no more swing trades from me. TSM is one rare company that even though it's at the all-time highs, you can make the argument that it is not expensive, because the forward valuation right now at a low 20s multiple, a low PEG ratio, is still fairly attractive in light of their expansive net margins and their fantastic revenue and EPS growth rates over the next couple of years. TSM's forecast for the next 3 years looks something like this. Look at the EPS gain and look at the revenue gain, which is why I say when you find companies, when they're at the all-time highs, you have to look at the fundamentals, right? This is one rare company that even though it's at all-time highs, I still would not mind buying into the company, although I wouldn't be buying into it as heavy as I was down here. I still would be probably accumulating some shares if I felt that I was under positioned on TSM. And with that, that wraps up all our analysis on our indexes and our big tech stocks. Now let's look at 10 companies that I do believe are possibly in nice swing trade territories. Okay, so these companies are going to be in no particular order, guys. Just 10 companies that I feel could be in good conditions right now, since they have not expanded close to their all-time highs. They could be looking good for a bit of a catch-up narrative right now. First one is going to be CRM. CRM, we've covered their earnings, fantastic fundamentals in around the current valuation, is currently fairly priced, in my humble opinion, whether you look at PE, PEG, or free cash flow yield overall. Coming out of support right now, 264 down to 235, might just be looking for a catch-up trade, guys. The monthly time frame holds the key, in my opinion. Higher lows are set, looking for some expansion. So that is trade number one. It is going to be CRM. Whatever tool you use for the trade is up to you, whether shares, call debit spreads, leap call options is completely up to you, but I do believe there's some good risk to reward profiles on this one. Second one would be Lockheed Martin. Lockheed Martin is a bit of a slow mover overall, so keep that in mind when you are positioning, if you are wanting to position in this one. 5-year trend line, 50 EMA, which is the red line right there, which also corresponds to the 200 weekly EMA, the green line. Just look for historical standards, guys. If you see a company here that whenever over the last 10, 12 years, it's clipped into its 200 EMA and it's always been a good buying opportunity, and you can find some confluence too, right? Horizontal support, nice accumulation range for how long? The last 3 months? Not a bad proposition to possibly be accumulating some LMT. The contracts, since it does move a bit slower, if you're using options, need to be long dated contracts because it is a slow mover overall, or shares are a decent proposition. Myself, I've been having a lot of fun writing short puts at the lower ends of these ranges. It's been a very profitable endeavor. Company number 3, ASML. ASML, I talked about this one a lot this week. In my opinion, this is one that is possibly going to play a bit of catch up. Apologies, the valuation is not up to date right now, but I'll do that one with you live right now. So the valuation, let's just call it, it's at $800 right now. I won't readjust the free cash flow yield, but just forward price to earnings, yeah, with the EPS towards the end of the year. 800 divided by 2609, you guys will see right now that it's trading at a 30.66. Arguably, if you just look at the PE, you can say that, well, when it gets into 30, it starts being a bit expensive, but they're expanding EPS at 17% per year. So it's trading at a 1.8 PEG, which is not all that bad, all things considered. I think it has a lot of catching up to do with the rest of the market. It is just now coming into favorable price action, right? We know that's been a monthly downtrend for a very long time, but now we got a nice engulfing move. So although it's probably, well, it can do this, but maybe something more likely is somewhat of a slower moving action of a recapture of price. And the MACD seems to have bottomed out on the monthly and is currently curling right now. You might see a bit more attention being placed onto ASML, and this one could be a nice expansion trade over the next 6 to 9 months. So maybe not a quick, snappy, maximum profit trade in the next 2 weeks, but something that you could maybe hold for expansion of the sector. Not a bad idea in my humble opinion. Another one like that is Berkshire. Berkshire, not the fastest company in the world, but one that has been diverging from the SPY. And whenever I see a significant divergence on the SPY with a company that usually tracks it pretty well, I mean, the evidence is pretty clear, right? Just look at the divergence. Berkshire's been coming down while the SPY has been going up. that usually does not persist. Berkshire usually follows in line with the SPY and usually outperforms. When you see such a significant divergence, usually it does correct. So that being said, Berkshire has been coming down for the better part of the last 2 to 3 months at this point into horizontal support, 483 down to 469. Not a bad location, especially around the 200-day EMA. Go back in history and gauge, other than a pure bear market like 2022, buying at the 200 EMA, other than COVID or 2022, in an expansionary market gauged by the Qs and the SPY, is it usually a good proposition to be buying Berkshire? Just look at historical standards and you should probably understand that the odds would be in your favor. So Berkshire, not a bad trade here in my opinion either. Moving on to the next ones, MasterCard and Visa. MasterCard coming in to the bottom end of their ranges down here, 533 down to 519. That was a decent area. I pointed it out last Friday and Monday. We're a little bit above right now, but still not bad price action, guys. We've been here for the last 4 months, right? You're not getting a tremendously fantastic deal on MasterCard overall, as the price is never going to truly be cheap because it's such a high quality company, but definitely worth a look for, especially for long-term portfolio buys or longer duration swing trades. You know, even if we come back down and revisit, this is where I started my positions. However, it's not bad here, but this would be a condition where if you don't know if the bulls are going to recapture this or not, it would be like a bit of an entry here, and then you kind of just count on the higher time frames to just let it expand and ride with the rest of the market. Visa is pretty much the exact same setup overall. Some consolidation, the monthly time frames look good. However, this month hasn't played out well because of the stable coin news, of course. Half position here, rest of the position there, and then you kind of just have to ride whether those are options or shares. Try to put some time on them. Well, especially if they're options, right? Shares, I mean, have unlimited time, but you guys know what I mean. Stop loss would kind of be invalidated below this lower location there. On Visa, call it 325 for a swing trade. And on MasterCard, you'd have to break below support 515 to invalidate that, as then your monthly bulls would kind of lose a bit too much ground. And we'd probably be going towards the lower 500, which is the 26, usually your final resting place during a heavy consolidation period for MasterCard and Visa. Moving on further, we have a couple companies here that might also elicit your interest, especially if you're into retail and apparel companies. Decker's Outdoor Brands had fantastic earnings. Unfortunately, they mentioned the word tariffs a bit too many times, and they said that they might face up to $150 million in costs. They said up to. They didn't say they were going to face that. They said up to, but they were doing everything to mitigate the impact of tariffs. That being said, it's been really low, under $100, 100 down to 90. This is one that I would not mind either shares or leap call contracts on. Their expansion of all of their lines of business are doing fantastic. If you don't believe me, go into their earnings. All of their product lines, whether domestically or internationally, are for the most part expanding at double-digit clips. A lot of hot brands within Decker's Outdoors, and they are below the 200 weekly EMA, which historically has been a good idea to buy the company at least when you're measuring over the last roughly 8 to 10 years worth of time. So definitely worth a second look of that company as well. We could talk about Nike, which had their earnings yesterday. Now, Nike, when I covered their earnings yesterday, I was doing it while they were having their earnings call. When I was doing it, the company was down about 2%. Today, the company is up 15%. But that being said, is it that bad of a proposition? No, we're just back to the March and February pricing. Now, I know you might be saying, well, I could have bought it back here and now, it's all the way up here. I mean, guys, look at the monthly chart, yeah? It's not that bad, all things considered. You're still buying it under the 200 monthly EMA, which Nike hasn't even tested since the year 2000, 2001. So all those things considered, it is up 15%. And we were noticing yesterday from what they said in their earnings on the presentation and whatnot, that this was the bottom, essentially, of the financial woes for the company. As a matter of fact, the CEO on the earnings call that I wasn't listening to because we were filming the video, the CEO actually said that as well. He said that the guidance for Q1 was going to be pretty good. They had a forecast of -9%. And the CEO actually guided, because they provided the guidance on the call, not in the earnings slides or presentation like I was showing you guys, mid-single digit outlook of growth. So there you go. They also raised fiscal 26, 27, and 2028 EPS estimates by 42%, 16, and 2% respectively. That is why the stock was up so much during and after the earnings call, and why the price action continuing today. Nike might just be worth a look for either leap call contracts if you want to take on that risk, or shares if you're trying to play the recovery story, right? Other companies we can look at as well is PayPal. PayPal, of course, a fintech idea. PayPal, although no longer a growth company, has a fantastic free cash flow yield. The X factor for PayPal, the reason that we'd be buying this one is the buybacks. Free cash flow is massive. The CEO has put growth on the back burner. He is optimizing for cost efficiency and shareholder returns as measured by free cash flow gains and EPS gains. So although they are not growing top line revenue that much, they'll be buying back an absolute ton of shares that will translate to share price appreciation. We were at the $90 level back in January, and there would be a very good bull case here to recapture some of those levels if the year moves on as such. And PayPal not being that bad of a buy, especially coming out of a big support zone too. Couple last ones and then we're done, guys. Shopify as well. One of my favorite growth stocks probably for the next 2-3 years. You can just look at the fundamentals, guys, and understand what I mean. Their EPS growth for the next couple of years is going to be a lot better than it was in the last couple of years. Look at this consistency, really starting to move higher, and look at the revenue growth, guys. It's hitting the S curve of expansion, right? So I do want to participate in Shopify, although it is somewhat, it's a lot off its lows, but we can't go back there, right? We need to measure at the current levels with their future growth prospects. Is it still a good proposition? And I do think so. The timeframes are looking good as well. Weekly uptrend, accumulation right now might just be looking for a breakout. Shopify, not that bad. I wouldn't be going extremely heavy with this position, but it is something that I would like to explore if we get a back test of resistance down here. I'm a big fan of playing short puts, but even for some leap call contracts, if you agree by taking that risk, or for some shares, not the worst proposition, guys. And it definitely has not ran as hard as some other companies in the market, which are clipping into all-time highs. All-time highs for Shopify, guys, is like 150, 160 from back in 2021. Although it's not trading cheap right now, this one does tend to get a bit of a higher valuation because it grows so fast. And lastly, but not least, we have a bit of an X factor trade here, and it is China. But I'm not going to go for Alibaba, even though it's a good proposition. I'm not going to go for Baidu, although it's a good proposition. I'm not going to go for JD.com individually or Tencent individually. I'm going to go for the entirety of the China trade overall. I think that from here, mid-30s up to $40 to $45 over the next 6, 9, 12, 18 months is not a bad proposition, which is why I have some leap call contracts overall. China has been doing a whole lot of nothing for the past 4 years. We know they're going to be doing heavy amounts of stimulus. Some people enjoy this trade. Some people absolutely hate it. But for those of you that enjoy it, I think it's a decent area to still position from here all the way down to the support range 31 to 29. Accumulation for eventual recovery of the Chinese market. We know that it has some growth and expansionary phases. Right now, we're just waiting for the next one. So not a bad time to be accumulating some K-Web rather than playing companies individually. I'd rather play the ETF overall. That is everything for the top. Well, not top, but 10 companies. Obviously, there's tons more, but I'll give you guys 10 for this video, and I'll try to bring you guys a few more in the next couple of videos too. So that was our entire market rundown. Now, before we end the video, let's dive into my portfolio and the trades made this week. Okay, so we're going to run through the wheel trades, guys. I mean, I showed you a couple of these on Monday, right? So we'll go through these very quickly. Visa 320 puts. We made some decent money on these, but I had to close them Monday. We took these last Thursday. I had closed them on Monday because it's a very heavy trade for me, and I needed the capital for other trades. But all things considered, if we can find, again, another Visa trade, guys, down here, 335 to down 320, I'm a big fan of playing it on the wheel, especially if you have a big account that can support it. Other than that, sorry, wrong window. Let's move on to BITX. BITX was very vocal on this last week in the top 5 options video. Mid to low 40s on 2 times leverage Bitcoin ETF. I'm a big fan. That is the mid to low $90,000 range on Bitcoin. You get some good volatility drops. It's a decent opportunity to play the wheel down there. At least it is for me, not financial advice, of course. Man, I got to get these windows right. So SOXL, I'm a big fan of playing SOXL every single week on some declines. I was usually right 1 level below the market. So just target the recent levels of support and you should have a good indication of where I'm going to be playing SOXL next week on a decline, rejection from resistance. I'll be looking for roughly, 19 down to 17 bucks if I can possibly find it. Into the next, I did it again, man. I did it again. Circle. So just take a screenshot of these if you want to. Circle was playing these twice, the 160s and the 130s. Every time Circle has a big red day like today, I try to find 0.5% for short puts as deep as humanly possible and wait till I show you the new Circle trade that I was able to fire off in the hours of the afternoon today. We got such an amazing strike, guys, for 0.5%. So looking forward to show you guys that. But Circle trades, they're just very deep out of the money trades. So far, so good for us. I'm just looking to play the volatility on the contracts. You can see this 130 here I took for next Friday. And in one single day, guys, actually, this was almost intraday. We got a nice decline of 50%. So I'll take those when I have an extra week of time on the contracts. Hims, this one was based off of the drop. I showed this one to you guys on the Monday session. Huge drop on the Monday session. When we were kind of down here, I played the higher 30 strikes at a 38 strike. If Hims drops again, I'll do it again next week. I'll play the mid to low $30 strikes if I can. Shopify, once again, you guys know it's one of my favorite stocks. So whenever it provides me an opportunity, I will play it. This one was yesterday on the big decline yesterday morning. We wrote some Shopify puts. I was very patient. I got the 102 strike. The 102 strike for Friday, we got it for 51 cents. Intraday, in a few hours, we closed it for 50% profit. I could have held it into the end of the day, but whenever I see 50% intraday, I usually do take those. Just bring up some capital, being capital efficient overall. You can make the argument. A lot of my members did hold this into the end of the day, but I just kind of want to lead by example here and say that it's okay to take your profits when you run into them so quickly. And lastly, Google. You might remember this one from last Friday. We got a really bad beat on Google. When I opened this contract, literally last Friday, I opened this one right before because I had my strike that I wanted. 170 was open for the following Friday. Then we got hit with news on that Friday session, then more negative news on Monday. And I was almost sure that I was going to get assigned on this one. I didn't mind because it was into my support range. I wouldn't have minded. But actually, it came back for us and we were able to close this one for almost 90% profit. So very successful week on the wheel overall. Whenever I close these contracts early, I always advise my members that depending on their buying power to feel free to ride them into the close if they want to. I'm aggressive on my profit taking, just want to stack that capital. But most of these, all of these, if held into the end of the week, would have been 100% wins overall. Directional trades, I had a GD. You might remember that contract from a while ago. We opened GD here. We were able to close it with some nice little upticks overall. We opened it actually all the way back there. We waited for the move. We were patient. We took some profits on it. Not too bad at all. We closed it for 355 after opening it at 270. Some of our members held it a little bit more, made a little bit more money, but 355 by 270 is a 31% ROI in just about a month. That is pretty good. Even though it's a small contract, a win is a win, and that is very decent ROI on capital employed, in my humble opinion. Then the NVIDIAs. You might remember I took the NVIDIA swing trades here prior to earnings, going for the expansion trade. Prior to earnings was right here. I was looking for expansion into the highs and then a break of the highs. I closed two contracts, one at the start of resistance, one in the middle, and one just yesterday with the all-time high break. All in all, very nice. We bought them for $1.82. The second one was closed at $2.55. The third one was closed at $3.10. Why am I saying that? Because prior, we closed this one before at the start of the resistance range for $2.35. So just clipping my profits out as the week moved on. Nike, we had a nice call debit spread yesterday, guys. I made a call debit spread yesterday, 65.5 to 70 call debit spreads for 80 cents, 2x in one single day. I'll take it, right? We also had a short put on Nike that I wrote on Monday, and I was able to close this one on Wednesday, a day prior to earnings. I was saying if it declined into earnings, I'd get back into it. I chose not to get back into the short put. I entered the call debit spread instead, and we made money on both. And then, of course, we have the put debit spread right there, which was just a hedge trade that I took on the QQQs all the way back here. I was saying that if we reject from resistance and break below the support lows, that I would probably be exiting this trade at a profit on this gap fill right here. But the invalidation would be a break of the all-time highs. Well, we broke the all-time highs. As a result, I closed the trade. It was pretty much worthless at this point. We salvaged. When I closed this one, I said we were going to salvage a couple extra coffees, and that's exactly what we did. We salvaged $10. It was a hedge trade. All in all, very good week of trading for us. Not too bad. If you take a look at the portfolio and how we are standing into next week, here are all the positions that I have for next week. Look at this circle short put that I got for next week, guys. 125 strike, which is absolutely ridiculous, right? You guys have to admit, I think, that's a pretty ridiculous strike, right? 125 by next Friday, I'll take it. That would be an extra what? 30% sell-off by next Friday. I'll take my chances. We got roughly 71 cents for that, which is over 0.5%. Other than that, everything's doing well, guys. The affirm call options right here, the 110 calls, they're almost up 2x. You can see the price here. It's about 11.50. Although this says 10.10, that's not accurate. This is the closing price. Almost up 2x on those. K-Web calls still in place. Rocket Mortgage calls still in place. TLT leaps still in place. The XLV leap call contracts still in place and up right now. All my cash is invested into SGov, which is what I tell you guys to do. Pending assignments, you may as well collect that juicy yield on your cash. And the combo trades here, a bunch of call debit spreads, some of which are new, you might have not seen. We have some apples. Take some screenshots. I can't go through them individually, right? Apple 210, 215, swing trade. Adobe as well, out of support, swing trade here. Amazon is the leap call contract. Berkshire, a new position, swing trade too. Google is the newest leap contract position. It is a debit spread overall. We are up nice. $575 right now on a $24 entry. So pretty good, guys. Well, $2,400, right? So we're up what? Let's call it, 20% almost, something like that. Looking pretty good. MasterCard as well is moving in our favor. MSTR, lottery trade that it took back in the day, call it about a month ago, looking for the Bitcoin expansion. It still has not happened. I'll be patient and wait for it. Micron, a call debit spread, leap that we took almost at the bottom of the move. $14.81 we paid for it. So almost $1,500. We are up $2,200 on that one. So about 150%. Pepsi still lagging right now. We are underwater on this Pepsi trade. Swing trade, a lot of time till September. PayPal, swing trade as well. We are slightly underwater on this PayPal trade, but it's not too bad. UNH, this is one that I took way back in the day, like a month and a half ago, midpoint through the decline. Unfortunately, it's completely worthless. So I guess that'll be a nice tax loss harvest for me. And UPS, also one that's been lagging behind severely. My strikes aren't even that far for July. 105, 110, but this one just has not moved in like a month's worth of time. Still looking for the expansion, 105 to 110. We'll see if we can get it before that expires. Overall, doing pretty good, but as you guys can see, right? How much capital have I deployed right now? 14 plus 5, right? About 20 grand. The account size right now is 41.6 grand. I have half of my cash in cash. So I have more than enough money to do a couple things with. Play the wheel, right? Because usually I run a little bit of margin too. I have so much buying power to play the wheel, but also if any other new positions come up, I can have the money to play them as well. So we've been doing a very good job of just stacking cash with the wheel trades, deploying that cash when we can find some swing trades. Most of the swing trades have been moving very well for us right now. And that is the portfolio breakdown overall. So hopefully you guys enjoyed that. If you enjoyed the entirety of the video, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing to the channel if you're new. I always love having you guys back here. We do these videos Monday through Friday after the close. And last but not least, guys, if you have any questions, always feel free to leave them down below in the comments section, and I'll be glad to answer those for you as well. Lastly but not least, if you guys want access to all my trades in real time, if you want to participate in a community of traders and investors such as yourself, we trade the markets every day, but we also build very high quality long-term portfolios. I'm a very big fan of maximizing both types of portfolios, but trading especially, guys, you see me trade every single day with you. You get access to all my trades in real time, whether those are the wheel trades, the directional trades that you see me take with call debit spreads or leap call contracts or any style of contracts whatsoever, or even some lottery trades. You get all of those. You also get access to our private morning live streams Monday through Friday, where I trade live for about 2-3 hours at the open and take all your questions on your stocks, your options, and your long-term portfolios. If you're not there, they're always recorded, so feel free to watch back. You can ask me all your questions in our chat rooms throughout the day. I'm very fast to answer there too. You also get access to our private videos, right, where I go through technical analysis, fundamental analysis, how to grow accounts, how to trade with margin, trading psychology, many different educational videos. As a matter of fact, all of my educational videos are only available in the Discord, and our members have been finding tremendous value in learning a lot from those videos. And also you get access to all my watch lists. You can copy paste all my watch lists. It takes 10 seconds. You also get access to all my charts. You just copy paste all my charts. Whenever you guys see technical analysis, support, resistance boxes, etc., and all the fundamental analysis that I do on over 150, 200 companies every single quarter, that comes on the chart. You just copy paste everything. You click 2 buttons. You get access to all that. It's just an added bonus. If any of that sounds good to you, the link to join our Discord and participate with us is down below in the video description. And don't take my word for it. Just look at our reviews. If you're still unconvinced and you want to know what other people are saying, just take a look at over 26 reviews that we have currently at a perfect rating. So thank you very much, everybody who's left a kind review. And I know it's not as if I force people to leave these reviews, right? So all that being said, guys, that's everything I had for you guys today. Enjoy the weekend. I'll see you guys on Sunday for the top 5 options video. Get some rest, relax, and then come locked in for Monday morning, and let's keep smashing these markets. So thanks very much for watching. That's it for me. Take care and peace.